following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the show with the chart of the DAX, but we'll quickly move over to the chart of Deutsche Bank. Folks, Deutsche Bank's executives are coming out with a once-in-a-lifetime offer of a 35% discount on buying shares of Deutsche Bank. I'm not the smartest, sharpest knife in the drawer, but you know, when they offer you something that 35 cents, 35% off, but the old adage is if the deal sounds like it's too good to be true, chances are it is. So I would be very careful of that. I do not understand the strategy of that at all. I really don't, but, you know, that's neither here nor there. They ought to read the book, The Art of War by Sun Tzu, in order how to time some of this stuff. My gosh, you certainly don't want to expose any weakness, and this certainly looks like weakness, in my opinion, but what do I know? They're trying to raise, you know, $8.6 billion, which in the banking industry is probably a drop in the bucket, but that's neither here nor there. By the way, today is a holiday in Japan. This is the equinox. They have a holiday every day, not every day, but on the equinox, the spring equinox each year. That goes back thousands of years. So this is a very important astrological event from historical perspective, because this is the one that we've seen on clay tablets going back to the Sumerians and Babylonians and stuff that was most probably related to the growing seasons, because we're getting ready, you know, to start the growing season very soon. We're doing the planning intentions will be coming out on the 31st of March, as our good friend Rich Anderson told us. So we'll have to take a look and see what some of you people are really funny. Anyway, that's what we're watching here. You know, the date is not for, you know, I don't think you can time anything on that date, but for longer term purposes, it probably means something. Remember, on March the 5th of 2009, which was 3 weeks before the equinox, you know, we had the biggest buying opportunity since 1932. And whether it'll happen again this way or not, we'll have to wait and see. Folks, one of the things that I want to mention a little bit here about the stock market, because we're at a very, very critical level here to take a look at. We'll do the Dow Jones first, because that's what everybody looks at. And I just wanted to point this pattern out to you here, is because, you know, when markets don't respond to good news, they only have one way to go, and that's down. Because you stop and think out. If you got something that's really, really bullish and the market's not going up, either people are taking profits or somebody smarter than you knows something. But if you look at this Dow Jones chart, everybody that has bought anything on the day after the speech to Congress on the 28th of the March 1st was that date. You know, we gapped up about 120 points, I believe, in the Dow. Everybody that bought a Dow stock is underwater, except with the few Dow stocks that have continued to go up, you know, like Johnson & Johnson and Home Depot and Apple. But the bulk of them, and which we're talking about, you know, the banking index, because that's so heavily influenced in the Dow Jones because of J.P. Morgan, and also the big one, which is Goldman Sachs. All of those are telling us that there's something not right here in River City. So we should pay particular attention to this, I think, because even if you'll look here, the chart I'm going to post now is a 4-hour chart. 4-hour chart. Each bar is 4 hours on Goldman Sachs. And as you can see, it also is down sharply below not only the lows of March the 1st, but below the lows of February the 28th. That's also completed a 1, 2, 3, 4, 5 expanding triangle to the upside. So these are factors that when the market doesn't react to good news, you know, you have a pretty good idea of what could happen. Now, the profit objective, if this is going to go down, if you'll take a look here at the long-term Dow here on the weekly chart, because we still have two gaps on the weekly chart. We filled the first one. Now we have another one coming in at 20,600. I believe we're going to hit that this week. That's just my guess, just by looking at the action of the market, the way that it looked like it was going to go higher, then close lower. So all you need is a sharp move down today of 100 or so Dow points, and that would set up a move of at least 2% to the downside here in the Dow today, if that in fact occurs. But that's still a long way. A long way. We're trading at what, 20,900, so it's only 300 points. That's easy enough. They could make 300 points on the upside too. We don't know the answer to that. But if you add all of these together, the main thing is the fact you've got these gaps that we feel very strongly they're going to be filled. And the second part is the market is not reacting to the good news. That's the usual thing. Don't forget about the crash, Randy. Don't think like that. Crashes don't happen enough to make your mind even fathom it, because you'll be disappointed so many times that the one time that you do get it right, you'll probably be too tired to trade it. So don't worry about a crash. Just trade whatever system that you have and use it, and you should be just fine. But don't think about a crash. That's No, it's not anymore, Randy. 300 points is not a crash, Randy. Stop and think. The Dow, that's only 1.5%. That's nothing. That's nothing. 1.5%. A crash is 16%. That's or 10%. Something like that. I mean, even 10% is not a crash. So there's nothing in that at all. By the way, since we're on that theory here on that thing, it's Commodities Magazine, Stocks and Futures. That's what it's called. It used to be called Futures Magazine. Then they changed it to Commodities Magazines. Now it's the technical analysis of something or other. Yeah, technical analysis of stocks and commodities. They send their magazine every week, and in the back of it they have the trading liquidity. And if you'll notice that the S&P is what they use as the guideline. And it has a percent. It usually takes 4% margin on the S&P. So if you're looking at something that's trading at, you take 20,300 times 50. So you'd be looking at about $100,000 contract, and that means you'd need $4,000, $4,000 to $5,000 to trade that, which is pretty much what they charge. So if you'll go through and look at those, you'll see the various liquidities. Now, the one that I really question in here is that number in fourth place is the Russell 2000. Folks, I have never traded the Russell 2000, and I've done a lot of trading. So I must have missed the boat on that puppy. So that one really surprises me. I had always heard that it had pretty bad liquidity, but we'll be able to see if that's going to case. Now someone's being funny. They're saying that there's no crash being not allowed in my lifetime. Well, it'll come. You're still young, Dudette. So be patient. But when it comes, if it's going to come this year, it should come in the month of May. That's based on historical records that I look at. Anyway, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a trip down memory lane here. I posted the chart from 1930s from a man named George Marshall. He was rather obscure. Not many people knew of him, but he did publish this 15-year forecast in the stock market, which turned out to be about 85% accurate. Well, when I was going to Don Mack's library about 3 or 4 times a week, that was one of the things that Don was always trying to find was some of the work of George Marshall. He really used every resource he could get. He could not find anybody, and he knew people who knew Roger Babson and some of the other people and stuff like that. But what I wanted to start out with this thing here with George Marshall, he was just one of the people during the 1930s that did some really fantastic work. One of my favorite things to look at during the 1930s was the work of Roger Babson, which was done with a work that was also followed on later by Dr. Alan Andrews, who I happened to meet way back in the 70s when he was in his 80s at that time. And, I had no idea, that some of these guys were interconnected until I started to talk to him. But I didn't understand the importance of Roger Babson until I started reading, some of the old books. He wrote about 40 books, but he was incredibly successful. And in fact, he was so successful, he went to London and he bought Isaac Newton's home and brought it back to Wellesley's, Massachusetts, where it still sits to this day, as I'm told. But he was a big believer in Isaac Newton's work, and he felt that all of his success in the market, which was quite a bit, was related to this action and reaction that you get. And what Alan Andrews did is he came out with these pitchfork lines that he used to some extent. But Alan Andrews did not trade, folks. When I met him, I don't think he'd put very many trades on in his life. He studied the markets a lot, much like what Bill Ehrman did, but he did not trade. That doesn't mean the work that he did wasn't very good. It just means that he didn't trade. I hope you understand the difference to that. Now, I wanted to post another one of these types of charts. I'm getting to a point here, folks, so bear with me just a little bit here, and I will put this up, and we'll take a quick look at it. Okay. There you go. You'll see here, this is another one of these median lines. Basically what it is, it's a channel line, and then you go on 8 to 10% on either side, whatever those numbers are, and that tells you what you're looking at here. So if you bear with me here, my alerts are going off. My alerts are going off for something. I think it's crude oil probably. No, it is the British pound. Hold on just a second. I got to correct something. There we go. All right, let's get back to this. The reason why I am talking about this is that there's a gentleman who wrote a paper about Dr. Alan Andrews and also some of Babson, and this is where I got the chart from Marshall. I already had that chart, but I didn't realize anybody had ever even mentioned the guy. But Greg Fisher is going to do a webinar for Ron Rossaway's Dynamic Trading Group. He's also going to be a guest for us, and I'm just setting up the date so that we can have him on, so we can talk about Alan Andrews, and also we can talk a little bit about some of these lines. I mean, they're very good because they're channel lines, and when you add the Fibonacci numbers to them, it adds even more power, because as you see these things hit along these multiple points on these pitchforks, and they're hitting 1.27 and 1.618 expansions, that gives you more a feeling that yes, there is something in the market that does repeat over and over again. But we've never find the actual 100% way, but don't ever expect to do that. But I think it'll be interesting to do that, and that's one of the advantages we have here at TFNN, is that these folks give us a great deal of latitude with sharing ideas and stuff, and takes a lot of different ways to skin a cat. So I meant that as a Freudian slip for all of you that are in the ASAPC, so I didn't mean anything negative about that. I've never had a pet myself in my whole life, so I'm not going to worry too much about that. All right, let's move on. I wanted to get back to that stock, Goldman Sachs, but I wanted you to see the banking index here. This is another one that looks extremely bearish from the technical aspect of it, and I'm pretty sure that we should be in a down week, and the banking stocks, which should pull the Dow Jones a wee bit lower. And a wee bit lower is not too much. We're looking at maybe a 2 or 3% drop this week if it does in fact work out. Because if we have that big gap there, the next big gap on the weekly Dow is 20,600, and so watch it, because that will be the second gap to be filled. We filled the first one, took 10 days to do it, and now we're in the process, I believe, filling the second. They will be, boy, this must be a busy day because all of my beepers are going off. Hold on just a second here. There's another one. Just give me 1 second. And I will turn it off, otherwise it'll drive all of us nuts, and the trip to the nut house is sometimes shorter than you might believe. Hold on just a second here. Just turn this off and we'll be all done here in a minute. There we go. Okay, that's it. That's what I wanted to see. All right, let's move on to the next chart that we want to cover. Hold on 1 second here, boys and girls, till I can get this moving. And I want to give me 1 second here. The market hasn't opened up yet. Why are some of these things beeping? I don't understand. I guess it's pre-market stuff. Who knows? Okay. Where's the chart that I want? Oh, I wanted to show you the British pound, folks. Here's one that we talked about in the newsletter this week because it had such a beautiful pattern. This is the British pound. As you can see, this is pretty much in a downtrend. We made a beautiful 78% retracement down there. We rallied about 300 pips. Last night, we hit that exact 61% number at 124.36, I believe, was the high. We sold off to 123.60 so far this morning, down just about 80 pips. It wasn't very much, but it started in the right direction. Now, if we get above the 124.60 level today, that would tell us that this is pattern is failing, and you don't want to be short. But it has some really good symmetry for being short. You have a 135 pattern, which shows you that you are in a downtrend. Each of the rallies back have been 61%. So this is the type of trade that when you want to look at it, you try to set it up that way. Unfortunately, these happen in the middle of the night, so you don't always, get the opportunity unless you pre-plan these. So we'll see if this is going to be, something that occurs in this matter. We'll wait and see one other time here. By the way, we're going to have on tomorrow, we're going to have Bill Koval of WDK Analytics. He asked to be on. He seems very strongly committed to the short side here. He thinks the major top for the year is in. He wanted to share his data with you and with us, and so we're going to have him on to, keep a eye on what's happening if this is a possible top in the market. He may be the only one that thinks that. All right, let's take a quick look here at the gold. Well, we got a break here coming. Let's just hold on here a second, and then we will. I think we have to. There's the break. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to hold on just a minute. The whole world is beeping this morning, so let's see what it is. Okay, there it is. Hold on 1 second. That's my trade alert, possibly in soybeans. So keep an eye on the beans here. They might get interesting here. All right, let's take a look at the gold market. I posted it up here. This is what I'm looking for in gold, folks. As you can see, we had that big ABCD to the downside. That was exactly 78% of the January low. And then we went sideways, and then, of course, at Fed time, the market took off and it's rallied more than $40. You know, the harmonic number in gold is $34. We've rallied $6 more than that. We actually went up a little bit higher last night. We took out Friday's high by about $2. We got to 1236 and a half. So I'm watching to see if we can get an ABCD structure, as you can see on the right over there, to come down into this level of around 1210. Well, that would be perfect, because from 1237 to 1210 is $17, which is 1/2 of the harmonic number. Now, it's hardly a perfect world we live in, but that's what I'm looking for to see whether it's going to do that or not. I don't do too well on breakouts. That's the understatement of the year. But when the patterns do pull back into areas where we think is pretty good support, that's what we would be looking at from my perspective. Silver has been doing pretty much the same thing, but we really need this thrust to get moving here very, very shortly, and if it's going to continue to the upside. So we want to watch the pullback if we get one, which is $17. Ideally, that would happen over a 2 or 3 day period, and then would have a pretty good chance for a low-risk entry there, with your risk being about $8 would be my guess in the gold market. The XAU has been moving around quite a bit, but not nearly as strong as we've seen here. Hold on here a second. Let me get this up here so you can take a look at it. You'll notice here with the XAU, it has not been nearly, is not really nearly as strong as the gold should be. As you can see, it's barely made a 382 retracement, whereas gold was able to make almost a 60% retracement, and silver did make a 60% retracement. So the gold mining stocks are still under a great deal of pressure. So we need this index to, to lock in step, because it's going to be hard for gold, to run without the gold and silver miners, would be my guess. But they've done it before, but it's easier if they run together. That's for sure of what we're watching. So let's just keep an eye on this as we go through watching some of these things, taking a look at it. Okay, that's what we had for the gold and the silver. We've still got a good chance in gold and silver for a long-term bull, but we want to see what this pullback is going to be if we get it. And, of course, if we don't, then maybe it's going to run away, and I don't believe it's going to run away, but that's neither here nor there. Okay, well, the first question I've got for today is about these gaps in the Dow Jones Industrial Average. Folks, we have never had a weekly gap on the Dow Jones Industrial Average. There's some debate about that going back to the 1930s, because data was a little iffy back in those days. But frankly, I have never seen one. The one that I remember the most was back in January 1991 when the market gapped up. But here again, that was a data problem coming from the Dow Jones family. They took the previous day's price and used that as the low of the day, which there was nothing traded, because the Dow at that time, they opened it, there were 13 posts, and each of the Dow stocks would open on those posts. I don't know if they still do that. I'm sure they're very hard to change down there, so I'm sure they open in rotation, whereas with the NASDAQ and the S&P stocks, they open when the bell rings. They all have their bids and offers ready, and everything's moving at the same time. So that's part of the reason that you have these data things. That's why Jim Twentyman has done such a great job of working with data. He has the best data sources that I've ever seen, and in fact, other people feel the same way. Anyway, we'll keep an eye on that as we look at this. When we were talking about the soybeans here, folks, we're going to be into the growing season very shortly here. They're getting ready to put the planting intentions out in April. They'll start to be planting the grains. So corn goes in first, and then beans going a little bit later. But we've never gone a year that I can ever remember where we don't have at least one or two crop scares. And this year will probably not be any different, because we're having such weird weather. It's hot one day, cold the next, so you don't know what it's going to be. I mean, on Christmas Day last year in Philadelphia, it was 78 degrees. That was 20 degrees warmer than it was in Tucson, Arizona. So, and this year we've had some really weird weather also. So these crops, even though we have large crops and sometimes we don't even have room to store them, that's really not very much, because if the world is in a situation where they could be looking at famine, these could be tremendous moves to the upside in some of these. So we've seen this before. Going back about 3 years ago, beans got all the way up to almost $18, and corn hit almost $7. And these are because there's not a lot available. If you lose a crop, and we don't lose them very often, but we have a bad one, this is what causes the big problem. Okay, let's move on to the euro, because I think this is the one that has some really interest in here. Let's just put this, hold it, let me get this straight so that I can put it in the room correctly here. Hold on, there we go. Okay, here's what we're looking at in the euro. This is what we had on Friday. You see that we had this 3 drive to a top pattern. It was a beautiful ABCD pattern up at this 107.85 level. If we have an equal move like we did on the other one, it will take about 3 days, and it will come down 2 days, and it'll come down to about the 106.70 level. That would be another 135 pattern. That would be the second one in that group. And that would be one that would look pretty interesting. The U.S. dollar index, which is the one that everything, that people base some of this stuff on as far as fair trade and stuff like this. If you'll give me a second, where is it? Oh, here it is. Hold on a second here. We'll get it ready. And then we will put it up. Hold on a second here. Getting a little better at this. Not much better, but a little better. Hold on. As you're going to see here on Friday, the U.S. dollar index right at the 78% level had a very, very quiet inside day, known as a doji. So far, that's been the low so far, and it has held that level. I think that the U.S. dollar still has the potential to get down to the 98 level. I believe that these two patterns that we're looking at right here with the ABCDs have a really good chance of getting down into that level. Now, this will not happen if we get above the 103 level. That would be a 3% move in the dollar. That would put the euro way down in the 104 level again, and below 104 takes us down to below par, which I think we'll get eventually.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I've had a request to talk about books. Some of my favorite books that I've enjoyed learning about trading. I think one of the very best books that you could possibly read is The Reminiscences of a Stock Operator by Edwin Lefevre. That was the pen name used by Jesse Livermore. I have read that book at least 50 times. I think it's one of the premier books in financials. It's very inexpensive. It's terrific. Also, I believe any book by Mark Douglas, The Disciplined Trader, and of course, Trading in the Zone, which he wrote here in the office here in Tucson, Arizona when he lived here. Those are just two. The book by Tony Robbins, in fact, any of the books by Tony Robbins are really good. Oh, we got a caller from Las Vegas, Nevada. Larry, are you there?
I am. How are you, Larry?
I'm above ground, staying away from open graves, my friend. What can I do for you?
You sound well. I enjoyed your Paul Horning story last week.
Yeah. I talked to my daughter Sunday, and she remembered it. You know, it was fun. Okay, what can I do for you, buddy?
Books. I've been meaning to ask you this, and I heard you say last week that Mr. Bressert had died. And,
yeah, he died on February 11th.
Oh, I have his book. I forgot the title of it. Power Cycles, which I bought back in 1980s. And you said you had worked under him, and I was just wondering, is there anything that you would say about his work that is something, that really stands out that you could say, boy, you should, use this?
Well, I didn't work. I didn't work with Walt, but I knew him. We all studied the same thing. We met. I met him in 1970 in San Francisco during the Cyclotech, which was the offshoot of the book by Hearst, The Profit Magic of Stock Transaction Timing, and Walt really got into it very, very heavily. The problem with Hearst cycle stuff, it only works for 1 or 2 repetitions, and then the cycle starts shifting. And I believe that shift is due to the astrological cycles that are there. But Walt built a huge business. One of the reasons I'm in Tucson, Larry, is because this is where Walt and Teresa lived, and I would come over and visit them several times, several times a year. And then when I was in Pismo Beach, he would come to visit. But at that time, they had moved down to Mexico. They had moved down to a little Mexican silver mining town because they wanted to get away from the hustle and bustle of the city. I think they had moved to Dallas at that time, and then from Dallas they went to Mexico and then back to here. He passed away, I believe, at his sister's. He was had Alzheimer's really bad. The last time he was here 10 years ago with his wife, and he and I and Arch Crawford went to dinner, and we started to see signs that night that there were problems. He couldn't remember certain things that should have been easy to remember. But anyway, he did a lot of great work. But the cycle stuff works if you have to use it with conjunction to something else, because the first cycle, in other words, when the first cycle bottom comes in at 36 days, the next one will come in at 72 days. But the next one, the third one that comes in, might be at 84 days or 112 days. So you have to have something to protect yourself to do that. That's why I was really into this stuff. But Dr. Miller, got me started looking at it astrologically, and I could get closer to these dates, much like what we see with Shane Smolian and also Bill Meridian and what's the guy in Florida? I can never remember his name. Norm Winsky. I know he's listening. Anyway, but Norm does a great job with that too. But he did a good job. He really did. And I think his son Jerome has taken over some of it, but I don't know for a fact if that's true or not.
Yeah, I've gotten emails from his son.
I wish you'd forward one of those to me. I would like to get in contact with him, because since he was, is he still in Chicago?
It's only an email I got from him, so I'm not sure.
Please forward it to me, and I'll track him down. Yeah.
Great. I have two books that you recommended that are absolutely fantastic by Frederick Allen. Only Yesterday.
Oh yes, yeah, that's a
and Since Yesterday. And anybody that enjoys 20th century history, U.S. history, these are a must. This guy is a very talented writer.
Yeah. Do you know I bought that book at a book fair for 10 cents?
Oh, geez.
Yeah, and it was brand. It looked like it was brand new. I turned down $50 for it about 20 years ago. I wouldn't sell it at any price, but that's really a fabulous book. It's really, yeah.
I don't know if you read the follow-up Since Yesterday, but they're both fantastic. I mean, he is really talented. He has the ability to put a lot of details in a few words.
Yes, he does.
And if you always wondered what everyday life was for Grandpa and Grandma, for me anyway, to be the 1920s, these books are fantastic. I mean, he even describes how you start a Model T, which one hand on the choke and one hand on the crank. I mean, it's a great book. One more thing, I noticed an acquaintance of yours passed away last month, Mannix.
Yes, yeah. His best friend was Tig Andrews, who was in my office at least 4 days a week for 6 years, and we became very close. And I got to meet Mike Connors several times. Both of those guys, Tig and Mike Connors, were incredible family men. They had wonderful families that absolutely adored them, and they should have, because they were real statues of the community, and really nice guy. Mike Connors was so good looking when he would come into the Drexel office that the girls would be spilling coffee, tripping over themselves.
Right.
And he was a real class act. He always had he was always highly manicured with beautiful suits and ties and stuff. So, and I don't know there were three of them. They were called the Three Musketeers, and the other one was Kirk Kerkorian. He's the really super rich billionaire.
Sure.
And those two guys grew up together in Fresno. They were known as the Fresno Indians, and they have great stories. But fortunately I knew those guys, and it was, I'm just a little poor boy from Indiana. I got lucky buying some gold and silver, and in fact, my daughter was laughing at me Sunday. She said, "Dad, you stumbled into this stuff, being an old hick from Indiana." And I said, "Yeah, but it's been a lot of fun." She said, "Well, it was fun for us too." So I was really lucky. That's basically it. I just walked into something that, turned out to be okay, and so that's pretty much it.
Yeah, you did well. The H.M. Gartley Profits in the Stock Market, I found one on eBay. It's $19,000. But it doesn't sound so bad because that's Australian dollars, so it's only about 15 and a half. U.S. dollars. So, yeah.
I have that book.
Wow.
I have one of the original copies too, but I use the copy that they have at the what's that place up in Oregon? I can never remember it. Oh dear, Billy Jones and his wife. Oh dear. Anyway, they have it there for $100, and it's really good. So.
Oh, well, that's a better deal.
Yeah, it sure is.
Well, Bressard's book is going for about $425 to $475 on Amazon and eBay.
Wow.
Yeah.
Holy moly guacamole.
Yeah. That's good. Thank you, Larry.
Hey, thanks for calling in, Larry. I love reminiscing with you. Thank you very much.
Too. Bye.
Okay, bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We were talking to Larry in Las Vegas about Mike Connors passing away. His family name was Ohanian, and because he was Armenian, and he died 2 days different than his good buddy Tig Andrews. Tig died a few years earlier, but he died on the 28th. Mike Connors died on the 26th. The other part was Kirk Kerkorian. He lived to be 100 years old, folks. One of the richest men in Los Angeles, and I'm not just talking rich money-wise. He was rich with family and friends. He was a real class act. anyway, they're gone. Anyway, take a look at this Dow Jones, folks. We got a chance to fill this gap this week at 20,652. The odds are about the same as picking any 4 teams to get to the Final Four in the tournament this year. Anyway, watch this Dow Jones. It's very, very set up because of the fact that we've had very bullish news and the market did not respond to it. In fact, responded poorly to it. That's one of the key indicators, a red light flashing in the market, to watch that. Not only that, but we have patterns in the transportations, the Dow Jones, and also I'll leave you with the one in the, which looks really one of the weaker ones, is the IWM. And you'll be able to see, that has some really good things to look at it. That's a good one, Mr. Z. I'll write that down on the old memory bank. He's saying that buy extra books now that I have, they'll be worth more when I go. I doubt it very much. But anyway, thanks for the nice words. We'll watch it closely here. Okay, I always say that because I am watching closely. I don't stay in front of the machine very long, folks. I work about 3 hours a day, and then I try to let the market, do its thing. So we'll see what is going. Sorry, I hit the wrong button on the computer. I'm not as quick as I used to be, or never have been very quick, but I didn't mean to put that up. But we'll see what's going on. Okay, I think I'm almost finished with the show. Anyway, watch the Dow here. I think we got a chance at 20,600.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.